Ladies and gentlemen, good day, and welcome to the HFCL Q2 FY26 earnings conference call hosted by ICICI Securities Limited. This conference call may contain forward-looking statements about the company, which are based on the beliefs, opinions, and expectation of the company as on date of this call. These statements are not the guarantee of future performance of the company, and it may involve risks and uncertainties that are difficult to predict. As a reminder, all participant lines will remain in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during this conference call, please signal the operator by pressing star, then 0 on your touchtone telephone. Please note that this conference is being recorded. I will now hand the conference over to Mr. Mohit Lohia from ICICI Securities Limited for opening remarks. Thank you, and over to you, Mohit.
Yeah, hi. Thank you, Rian, and good afternoon, everyone. Thank you for joining us today for Q2 and H1 FY26 earnings call of HFCL Limited. First of all, I would like to thank management for providing us the opportunity to host the call. From the management side, we have Mr. Mahendra Nahata, Promoter and Managing Director, Mr. Vijay Raj Jain, Chief Financial Officer, Mr. Manoj Baid, Company Secretary, and Mr. Amit Agarwal, Head of Investor Relations. So without further delay, I would now hand over the call to Mr. Nahata for the opening remark. Thank you, and over to you, sir.
Thanks, Mohit. Good afternoon, ladies and gentlemen. I extend a warm welcome to all of you on HFCL's earnings call for the second quarter and half year ended on September 2025. I trust you have had the opportunity to review our financials, press release, and investor presentation, which are available on our website and the stock exchanges. The world around us is changing at an unprecedented pace, driven by rapid advances in artificial intelligence, cloud computing, and digital infrastructure. Technology is no longer just an enabler. It is reshaping economies, industries, and societies. Supply chains are being redefined and customers are demanding smarter, faster, and more sustainable solutions. Against this backdrop, HFCL is making a decisive and confident shift, moving beyond Make in India to Innovate in India, creating cutting-edge products and solutions which are capable to serve both domestic and global markets. The telecom industry is at an inflection point. India continues to be one of the fastest growing telecom markets globally, with 5G rollouts accelerating and Bharat 6G vision of 2030 shaping the roadmap for the next decade. Data traffic in India is expected to grow at a CAGR of 22.39% over the next 5 years, driven by increasing smartphone usage, OTT consumption, and enterprise digitization. After a subdued phase, the global optical fiber cable market has witnessed a strong revival, led by surging demand from hyperscalers and data center operators. The explosion of AI workloads and cloud application is fueling demand for next-generation high fiber count cables, a trend that is expected to sustain for several years. This revival perfectly aligns with HFCL's strengths in design, manufacturing, and innovation, positioning us to capture larger share in the global market. Globally, telecom operators are ramping their investments in fiber networks to cater to the increasing demand of data consumption. Our investments in enhancing the optical fiber and optical fiber cable capacities, indigenous telecom and networking products, and solutions position us to benefit from this sustained wave of network modernization. Our progress in Q2 of FY26 reflects our strategic vision with capacity expansion initiatives, significant defense opportunities, a robust export pipeline being built, and industry-leading ESG credentials fully aligned with our long-term strategy. As we discuss today's results, I will share how these initiatives, together with our broader strategy, are positioning HFCL for sustained growth and leadership in telecom, defense, and digital infrastructure. This quarter marks a transformative milestone for HFCL as we begin the planned expansion of high fiber count cable manufacturing capacity from 1.73 million fiber kilometer per annum to 19.01 million fiber kilometer per annum. This expansion has already commenced and is partially already operational. It will be fully operational by June 2026. Upon completion, HFCL total optical fiber cable capacity will reach 42.36 million fiber kilometer per annum, positioning us among the top global OFC manufacturers. This scale advantage will not only enable HFCL to cater to rising global optical fiber cable demand, but will also lead to improving cost efficiencies and market competitiveness. HFCL continues to strengthen its global footprint. In the first half of FY26, we secured export orders exceeding rupees 650 crores for supply of optical fiber cables from leading international customers to be executed by April 2026. More export orders are already in pipeline. These opportunities reflect the growing confidence global customers have in HFCL's technology, reliability, and execution excellence. On the optical fiber front, our capacity expansion program is progressing extremely well. We have already achieved a capacity of 28 million fiber kilometer per annum. With all our optical fiber and cable plants now running at full capacity, we are well positioned to cater to the surge in global demand, particularly driven by AI, cloud, and hyperscaler-led network expansion. Our ECA optical fiber, engineered for higher performance and reduced signal loss, is gaining rapid adoption across domestic and international customers and is expected to contribute a major share of our fiber revenues going forward. In the defense business, HFCL continues to build momentum across multiple fronts. Our subsidiary HTL Limited secured a prestigious contract worth 101.82 crores from Indian Army for supply of tactical optical fiber cable and related accessories. This is more than a business win. It is a strategic contribution towards strengthening India's defense communications capability and underscores HFCL's expanding role in building secure, indigenous defense solutions that support national security objectives. Additionally, HFCL has secured an order of approximately 50 crores for thermal weapon sights, with execution already underway at our Hosur facility. This marks another step forward in our commitment to indigenous defense manufacturing and reinforces our growing presence in high-impact security-focused technologies. With multiple tenders already participated in, we expect more such significant orders to follow, further strengthening our position in India's defense electronic ecosystem. HFCL is well positioned to capitalize into a significant opportunity in the defense electronics space. The ongoing geopolitical environment, marked by heightened global conflicts and rising defense modernization priorities, has created significant opportunities for indigenous manufacturing. Global inventories for electronic fuses, shells, and other armaments have depleted, creating urgent and strong demand for local manufacturing. Our electronic fuses are currently in the final stages of trials, which we expect to complete by the end of next month. Upon successful completion, which we are confident of, we will be well positioned for large-scale production and supply to defense establishments. In parallel, we are developing state-of-the-art drone detection radar with soft kill option, which is expected to enter production within the current financial year. Lab trials are underway and field trials are being set to begin shortly. The product has already attracted strong market interest driven by growing need for autonomous aerial threat management system. A landmark development during this quarter was the sanction of 1,000-acre land parcel by the government of Andhra Pradesh to set up defense manufacturing complex. This upcoming facility will focus on production of artillery ammunition cells, multi-mode hand grenades, and other critical defense equipment. We continue to strengthen our position in India's defense ecosystem through deeper engagement and participation in large-scale indigenous programs. During the quarter, we participated in a significantly large bid for upgradation of 811 BMP-2 armored fighting vehicles of the Indian Army. The program represents a key milestone in India's defense modernization and self-reliance journey. Our ongoing defense product development, from electronic fuses and radars to thermal weapon sights, coupled with upcoming defense facility in Andhra Pradesh, will help establish HFCL, a center of excellence for defense electronics manufacturing in India, with both domestic and global opportunities. The quarter also witnessed a solid traction in India's digital connectivity programs. HFCL has been playing a critical role in BharatNet initiative, and I am pleased to share that we have received additional orders for routers under the BharatNet project for the West Bengal circle. We have participated in 2 additional circles this quarter. We expect meaningful orders inflows from these circles also, further strengthening our leadership position as a key partner in building the nation's broadband infrastructure. Our indigenously developed telecom and networking products continue to witness strong demand across telecom enterprise and broadband applications, reflecting our growing relevance as a technology-driven solutions provider. These initiatives mark HFCL's strategic shift towards high-value, technology-driven manufacturing in defense and telecom. With expanded scale, diversified product lines, and export tailwinds, HFCL is poised for sustainable and profitable growth. Our plants continue to operate at full capacity utilization, underscoring robust demand across telecom, defense, and exports. HFCL has taken a strategic decision to divest its entire 15.19% stake in Nivetis System Private Limited for 52.51 crore. While the transaction is currently underway, this move reflects our intent to sharpen focus on core strength in telecom and defense. The capital redeployment will support high growth, innovation-led initiatives aligned with our long-term vision. HFCL continues to be a front-runner in sustainable business practices. Earlier this year, we received an ESG rating of 63 from NSE Sustainability Ratings Analytics Limited. I am pleased to share that this has further improved. ESG Risk Assessment and Insights Limited has now assigned HFCL a ESG rating of 65, and CFC Finlis Private Limited has rated us at 73 in October 2025. These achievements reflect our unwavering commitment to environment stewardship, social responsibility, and strong governance. For HFCL, ESG is not merely a compliance exercise. It is a strategic imperative that drives innovation, operational efficiency, stakeholder trust, and long-term value creation. Now coming to financial performance of Q2 of FY26. Revenue was 1,043.34 crores versus 871.02 crores of Q1 of FY26 and 1,093 crores of Q2 of FY25. EBITDA stood at 203.37 crores versus just 42.93 crores of Q1 and 171 crores of Q2 of FY25. EBITDA margin was 19.49%, very healthy EBITDA margin, versus 4.93% of Q1 and 15.71% of Q2 of FY25. PAT was 71.92 crores versus loss of 29.31 crores, 30 crores in Q1, and 73 crores of profit in quarter 2 of FY26. 25, sorry. PAT margin was 6.89% versus negative 3.36% in quarter 1 and 6.71% in quarter 2 of FY25. Segment revenue, telecom products stood at 51.43% versus 66.35% in quarter 1 and 46% in quarter 2 of FY25. Order book stood at very healthy order book of 9,981 crores, practically 10,000 crores, as of September 30 on 2025 versus 10,480 crores on the previous quarter. These strong financial results reflect the robustness of our business. As we look ahead, HFCL's journey is clearly defined by innovation, diversification, and execution excellence. From the revival of the global OFC market and the ramp-up of our IBR capacity, breakthroughs in the defense manufacturing, and expanding export momentum, each milestone reinforces HFCL's evolution into a technology powerhouse with global footprints. With strong foundations, expanding opportunities, and trust of our stakeholders, we remain committed to delivering sustainable growth and long-term value, guided by our philosophy of innovate in India for the world and to strengthen India's technological sovereignty. Thank you very much for your continued support, and I wish all of you a very, very happy Diwali in advance. Thank you very much.
Thank you. Ladies and gentlemen, we will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touch-tone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use their handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question comes from the line of Abhishek Jain from Aryan Capital. Please go ahead.
Yeah, thank you for taking my questions and wishing you HFCL team on happy Diwali. Just want to understand, sir, what will be the impact on US tariffs on our business? Second question on the follow-up side, are we maintaining our 20% guidance on the revenue side for this year?
Abhishek, thank you very much. First of all, yes, we are maintaining that guidance of 20%, and you will see increase in revenue coming up from the current working quarter. So I'm maintaining that guidance, number one. Number two, Abhishek, impact of US tariff. This is something, can anybody predict what is going to be tomorrow? Not even government of India can predict what Mr. Trump will come out with something else tomorrow. But anyway, having said that, we have been able to minimize tariff impact on HFCL. I don't want to go into that detail, but we have been able to minimize through completely legal procedures. There's nothing misdeclaration or nothing illegal about it. Very legal procedure with relevance to certain US court decisions and customs ruling. We have been able to minimize a tariff impact on HFCL. That much I can say. So there is very minimal impact on HFCL's exports, which is mostly optical fiber cable to United States. Okay. It would not be proper for me to go in more detail, but I can assure you impact is minimal.
Thank you, sir. One more just follow-up question. Can you talk about how we are doing in defense and what kind of strategy, or if you can talk about 2-year or 3-year strategy on the defense, what kind of revenues we can see on the defense side?
Abhishek, I say defense is going to grow very strong. Government of India has decided to strengthen our defense preparedness, as we all know from the normal, news items, media statements from our various leaders we see. And there is a huge emphasis on self-reliance, that more and more things are to be produced locally. So there is a big growth in the defense market as a whole. And if there is a growth, then all the people who are able to produce locally with this importance of self-reliance are naturally going to grow. Of course, doing anything in defense takes little time, a little extra time I would say, because of the test procedures involved. As far as HFCL is concerned, we are doing a lot of things in defense. One, communication side, yes, we have executed a very large network, and we expect to start annual maintenance contract of that, which would be about 170 crore per year, which has already been accepted by Indian Army. Then our electronic fuses have already reached the testing range. I expect that within the month of November the testing would be completed, and I am very sure that our fuses will pass those tests. And I expect a very, very good demand coming up for those electronic fuses, not only from India, but from many other countries. Moreover, radars, which you have designed, which I did not cover in my speech, those are attracting very good traction. Radars are not only used for border defense, they are going to be used for many of the critical infrastructure within India also. So we are going to give a full presentation to the Home Ministry also, that how these radars are useful for not only border, where also Home Ministry is responsible to a large extent, like BSF and all that. BSF, IDPP, all are come under Home Ministry, not Army alone. And also coastal surveillance, where Navy is already trying our radar for last 6 months. They first tried one, now they have put 2 more in 2 different locations. I am not free to tell you those locations. And they are able to monitor ship movements around those areas with a connectivity to the naval headquarters. Naval headquarters, they can see the ship movements happening in those areas. Those are the kind of radars we have developed. Our drone detection radar would also be ready very soon with a soft kill capability. So these are equipment, and some more equipment which we are designing, like maritime detection radar. There is another equipment we have designed. Electronic fuses, as I already told you. So all radars, fuses, participation in BMP-2 upgradation program, which is a multi-thousand crore program, where we are one of the 5 shortlisted parties. I am sure, and with number of more products which we are talking about, including ammunition, which is going to be another area of our expansion, where we have already been allotted a 1,000-acre land parcel in Andhra Pradesh, where we propose to set up factory for producing ammunition and several other products of defense application. And all that put together, I am very, very confident about defense business in future. When you come to revenue expected, next year, coming year, which is in the current year, I would say, I expect roughly about 200 plus crores of revenue from defense. Next year, it should exceed 500 crores. And year next to that, I am pretty hopeful. I am not giving any projection or guidance, but it should reach in 4 figures. The number of products which we are having, and number of new products we are developing, defense revenue should increase multifold in coming years.
Thank you, sir. So what will be the margins on the defense segment?
Look, it depends product to product. Generally, since defense is a market which is a bit of a difficult market, margins are better than normal communication products, I would say. So you can say 15% net margin as a general rule, I am saying. Somewhere it could be 10, somewhere it could be 20. But as a general rule, I am saying, in export it could be better. In export, it can be as high as 20 to 25%.
Profit margin, sir?
Yeah, profit margin.
Sir, last question. Sir, is there any compelling case for us, because now we are working into 3 different segments. telecom product, EPC and defense. Is there any compelling case for value unlocking via demerger or any other opportunity for us?
We have not really thought about any such at this point of time. If we think about it, we'll come back to you.
Okay, sir. Thank you very much for taking my question, sir, and all the best.
Thank you. Ladies and gentlemen, in the interest of time and fairness to others, we request you to restrict to 2 questions per participant. The next question comes from the line of Bala Subramanian from Aryan Capital. Please go ahead.
Good evening, sir. Thank you so much for the opportunity. Sir, beyond high count fiber cables, what specific passive connectivity solutions products you are developing for hyperscale data centers? Recently, one of the wire and cable player mentioned nearly 8 to 9% of total data center project cost goes for wire and cables. I just want to understand what kind of opportunity size we have, especially for data centers.
Data center, I see a lot of noise coming. Mr. Bala. High fiber count cable is just one of them. Then MPO cable solutions, for example, connecting rack to rack connectivity. Those are some of the opportunities which are there. Likewise, a lot of passive connectivity solutions we are developing. Not only high fiber count cables which are used for long distance connectivity from data center to data center, but within data center connectivity solutions also we are developing at this point of time. And the way the hyperscaling of data centers are taking place all over the world, predominantly in US, and now India is also doing a lot of work in this area. We expect that revenue from our passive connectivity solution, including that for telecom, which we expect this year to be around 400 crores, should reach to 4 figures in the next financial year. That is our expectation, because we are developing those passive connectivity solutions for data centers also, which is taking little time because those are very specific, very high-tech solutions. And I think we should be able to complete those development by January or so and start exporting those passive connectivity solutions also, apart from the high fiber count cables which we are doing at this moment of time.
Okay, sir. So I think 2 years back we used to maintain nearly 19-20% kind of margins on telecom product side. I think right now this quarter we have reached nearly 23.7%. How do you look at telecom products margin in coming quarters or next 2 to 3 years time frame? And also you can give us update pricing trends for OF and OFC side and inventory levels on global operator side.
Mr. Balasubramanian, there is a lot of noise behind you and voice is not clear. I can't understand what you are exactly saying. There is a lot of noise and...
sorry, sir. Yes, sir. So I'll repeat again. 2 years back, we used to maintain nearly 90-20% kind of margins for telecom product side. In this quarter, we have reached 23.7%. I think it's above earlier levels. I just want to understand what kind of margins we can expect next 2 to 3 years time frame. And secondly, and you could please update on that pricing trends on OF and OFC side and inventory levels on global operator side.
Look, margins, Mr. Balasubramanian, varies from product to product, customer to customer, time to time, and again competition dependent. This quarter, our EBITDA margin has been 19.49%. We expect to, in this current financial year, we expect to be around that only. Specifically, I cannot tell you, which product would get how much margin at what time frame. Like for example, last quarter, fiber optic cable margin was very bad. This quarter, it has improved. So telecom products also, it varies product to product and time to time. Generally, you can say net margins are centered around 10% or so, generally, and EBITDA margin would remain about anywhere 18 to 20% kind of a number. But I think we should be able to maintain the same number, what you are seeing right now.
Bala, we can take your questions offline. There is a lot of echo in your voice.
Okay, sir. Thank you.
Thank you. We take the next question from the line of Pranav Kshatriya from Emkay Global. Please go ahead.
Hello. Thank you for the opportunity. I got a couple of questions. Firstly, I see export share for telecom products have gone up to 26%. Can you give some color on the type of demand you're seeing? Are you seeing higher fiber count because of the data center rollout, which is sort of accelerated? Some color on the volume growth, where it is coming from and how the pricing is trending. That's my first question. And second question would be, the margin performance on the overall basis has been pretty good in this quarter. Are there any upside levers or a downside risk to those numbers? These are my two questions. Thank you.
So Pranav, I can't give any color. I can tell you whatever it is, plain simple. There's no coloring out here. So, exports have increased. Definitely it is 28%. And it is majorly because of fiber optic cable. And within fiber optic cable, yes, data centers are contributing a lot because that's a new market opportunity which has opened up. But telcos are also contributing a lot. We are exporting a lot to telcos also. We have been able to get into tier 1 telcos in Europe and America both. Hitherto, we were not able to supply to tier 1 operators. But now we have got entry into tier 1 operators also, which is a very good thing. And that will provide stability and increase in exports. If you ask me, if I look at the current market situation of fiber optic cable and what I see happening in next 3 years in terms of increase in AI usage, increase in OTT usage, machine-to-machine communication, and all those kind of things which are happening, particularly AI, I think that next 3 to 5 years demand of data center or even telcos for high fiber count demand is going to be very, very high because data capacities are increasing immensely. I just had one figure. United States is just US as a single country, millions of new servers are being put every year. Millions. While in India we are talking about 1 lakh every year. And there they are talking millions every year. That kind of growth in data center is happening. And we are able to capitalize on that growth. That growth doesn't mean they're supplying to data center alone. But telcos also carry data center traffic. When many places data center are interlinking by themselves. Many places they are carrying their traffic on telco networks. There the demand is coming from telcos. It is data center and telcos both, which are giving us this order book. But high fiber count cable is being used by both of them. It is a misnomer that it is only data centers. It is telcos and data center both. In India, as the demand grows, the capacity requirement of carrying data would be to the part of telco. So telcos will be buying more fiber. So it is the kind of a situation where data center increase in data consumption is increasing the demand of fiber optic cable, maybe by telcos, maybe by data centers. That is one. Second, the price of course of the fiber optic cable realization has improved from previous realization of fiber optic cable in terms of fiber per kilometer, which was roughly about 850 rupees per kilometer in last quarter, the last quarter, it has gone up to about 950 rupees per kilometer or so. 100 rupees per kilometer has been increasing the realization of per kilometer of fiber for fiber optic cable. It has gone up by about 100 rupees. That is how you see the increased EBITDA margin also. And I am sure, this good demand trend for fiber optic cable will continue for 3 to 5 years at least. And our strategy of increasing our capacity for fiber, which we have already taken to 28 million fiber kilometers per year, and cable which will very soon become 45 million fiber kilometer equivalent cable per year, really has shown good results, and it is going to keep on showing better and better results for next 3 to 5 years because of continuous increase in demand. And as far as the company on overall is concerned, not only this, but demand for defense products, which we are now on the verge of receiving better orders, and also at the same point of time, government-led programs, something like BharatNet, for example, where we have already got massive orders, and number of circles are still going to follow. We expect to receive reasonably good size of orders, either directly by participating in the tenders or from the companies which participate in the tenders and win the contracts from them for supply of cable and different equipment. The future is, in my opinion, increase in demand in export, increase in demand locally, and then at the same point of time, defense on the verge of explosion now, I would say, in the country, in terms of increase in demand. We expect a very good future.
Sir, just a small follow-up here. Can you talk a little bit about, how's the capacity utilization been during this quarter? I understand that you are expanding capacity, but currently, whatever capacity you have, how much is the capacity utilization?
90%.
Okay, fantastic. Thank you so much. Wish you all the best and wish you a very happy Diwali.
Thank you, Pranav.
Thank you. The next question comes from the line of Bajrang Bafna from Sunidhi Securities. Please go ahead.
Congratulations for a good set of numbers, sir, after a lull of last 2 quarters. So broadly, as per your commentary, it is very much evident that the demand for both fiber and cable is going to extrapolate because of not only telecom side but also from the AI and the data center side. So when we are guiding for these margins or the capacity utilization development across the global scenario consideration, can we think of the prices of these both fibers and cables are also going to inch upwards due to this massive upsurge in demand and considering the demand supply scenario going forward? So if you could guide on that front, will be really appreciated, sir.
Yeah, Bajrang, is a good question. Prices is always a function of demand and supply. If you ask me in general that whether fiber optic cable prices is going to go up, it is a yes and no answer, because the different kind of fiber optic cables, some have excess capacity, some have low capacity. What we did, we foresaw this demand of high volume fiber optic cable coming up much in advance. As a result of that, we developed those high fiber counting cables. Up to 1700 fiber count we have already developed. We are on the verge of developing another cable of 3400 count fiber optic cable. So those kind of cables which are very difficult to produce, only few people are able to produce, and there are more number of buyers than there is a capacity to supply. There I expect not only capacities to be filled up very quickly, but also at the same time there could be some increase in the pricing also. Another point I would like to say, today there is a rush to book capacity by the buyers. We have a situation where buyers are asking us for 3 years commitment to supply a particular quantity. And we are not able to give that kind of a commitment. We don't want to give that kind of a commitment because we expect better pricing to come in future. And we being backwardly integrated to a level of supply, manufacturing fiber and different other raw material, have a natural advantage of economies of scale also. So we are shying away from giving, 3-year commitment to the buyers. They are tier 1 operators for data centers as well as telcos. world's leading telcos, which are asking us 3 years commitment for supplying the quantity. They want to book our capacity, which we are not willing to do at this point of time. That's the kind of a situation. I am sure with that kind of a demand-supply situation for specific type of specialized cable, which is not only cable is specialized, but fiber is also specialized. Because when you want 1700 fiber cable in a particular diameter, you have to have a very good technology to pack those many fibers in small diameter. So we are able to do that. And that limits the number of suppliers vis-a-vis demand. So that will not only book our capacity for all our expansion we are doing, maybe we will have to consider more expansion at some point of time in very soon. But at least we definitely expect, yes, you're right, some increase in the pricing in months to come.
Got it, sir. And sir, just one extrapolated question. Now we are going to go towards 45 fiber kilometers capacity, next year onwards. So how do you see, considering this kind of significant surge in demand over next 3 to 5 years, this capacity is going to fill up? Are we going to see the 80% sort of utilization in FY28?
More than that. As I said, people are asking for 3 years commitment of reserving the capacity. Where is the question of our fulfilling the capacity? Capacity, if I want, I can fill it immediately. We are not doing that because right now, we are looking at the kind of demand scenario. Prices may become better. Why should I book orders for 3 years? So there is absolutely no issue. Absolutely no issue.
So just a broader thought process that if 45 we are able to utilize 85% utilization in 28, we are talking about almost, assuming 1,000 rupees sort of realization, 3,500 crore sort of top line, and with 20% margin, this itself can give us 700 crore plus EBITDA, within 2 years time frame. Is my understanding?
This is your fair calculation on the basis of the current results. I would not give any such forward-looking statements which, law prohibits me from doing so.
I got it, sir.
Your calculation, which is, you are an intelligent person. I would only say that.
Got it, sir. And just China is a factor. Always they have, done the suppressing the pricing side for the entire sector. And now there is an emergence where US or Europe, they don't want, these Chinese cables to come into their, uses. So how do you see that China as a factor, for the overall context, global context, and for our company?
Look, China is not a factor in many of the developed markets. Europe and US, most of US not at all. Europe, most of the countries don't use Chinese cable. Because telecom as such, they don't want to use Chinese because of geopolitical reasons, not for any other reason. But Chinese quality is always a suspect, of course, but I don't say that China cannot produce good cable. They can also. But for geopolitical reasons, they don't want to use. So I don't find China is a big threat in our current market opportunities. When we go to the markets, which are Chinese-dominated markets, at that time we will see. But right now we don't intend to do that because in our own markets, where we are supplying, there is enough demand for us, where we don't have to compete with Chinese.
Okay, got it. Thank you, and all the very best, sir.
Thank you, sir.
Thank you. Ladies and gentlemen, in the interest of time and fairness to others, we strictly restrict you to 2 questions per participant. The next question comes from the line of Hardik Vyas from ET. Please go ahead.
Good afternoon, sir. I had a question. I wanted a breakup of 5G products in optic fiber and other 5G products.
No, there is nothing called 5G products in optic fiber cables. Optic fiber cables are used for 2G, 3G, 4G, 5G, 6G, for everything,
Yes. So optic fiber cables revenue and other 5G products revenue, that is the contribution that I'm looking at.
Okay, sorry. It has been 82 and 18, roughly about 80-20 you can say. 80% has been optical fiber cable and 20% has been other products. The reason 5G product revenue in this quarter was low, but we had a problem in supply of chipsets from one of the big chipset vendors. I don't want to name a company. We had a supply problem from them. Otherwise, it would have been higher by another 10% to 15%. Because of the chipset supply being delayed, this became a bit lower. Otherwise, it could have been much better.
Okay, so that problem has been rectified now, and so we can have a better revenue in coming quarters, right?
Yes, that problem has been rectified. We have started receiving those chipsets from last week. So this will certainly improve this quarter. As a percentage, it could improve some, but if fiber optic cable revenue further goes up, percentage may not improve that much, but the absolute amount will improve.
Okay. Sir, my second question is pertaining to IBR cables. We are presuming that the pricing of IBR cable would be substantially higher than normal optic fiber realization of roughly 950 to 1000 that we are getting in optic fiber cable. IBR would be substantially higher than that.
I don't say substantially, but some percentage higher it would be because it's a newer technology. Machines are very costly. Not many people are able to produce it. And then you have to have a, development capability to design these kind of cables, which are very difficult to design. So when there is a demand-supply gap where the supply is lower than the demand, prices tend to become little tight for, tight in a sense that become a little higher than normal loose tube cable, where the capacity is immensely high, but the demand is not that much.
Okay. Okay. And sir, my last question is pertaining to the PCS revenue. This year for telcos and data centers, we had put the number at 400 each, if I'm not wrong.
No, this year we said total 400. Next year we said 900 to 1000, both put together.
Thank you. We take the next question from the line of Agam from RSPN Ventures. Please go ahead. Agam, if you can please unmute from your end and proceed with your question.
Yeah, I had two questions from my side. Am I audible?
You are audible, but not very well. But anyway, you continue.
Yeah. Are we planning to develop any facilities in the US for catering to the bead demand?
Look, no, not at this moment, because bead funding itself has not started to a great extent. And even without bead demand, we have a very good demand coming up from US. So there is no reason why should we be increasing our capacity for bead, which itself is, bead funding has not been to the extent in the current US administration what it was expected to be in the last regime. What was expected this year, this regime, that has not happened. So bead demand is very little, and in any case, whatever capacity we have, it is being fully used in Europe, US, and our other Middle East and other markets. So there is no reason for us to unnecessarily invest to cater that very little demand in US for the bead.
Okay. And just wanted to understand better a bit on tariffs. What is the current effective tariff rate which is getting applicable to us, and how are we mitigating the impact of tariffs? As you said that the impact is very minimal. So what is the effective rate, if not the methodology from which we are able to reduce the...
Confidential question. I would not give you a straight reply to that of the percentages and all that, but at least I can say it is a minimal impact, and it has been mitigated by absolutely lawful way of doing the things, and impact is minimal, that much I can say. Percentages and all that, I would not go into that detail at this point of time, but yes, I don't say that there is no impact. Small impact might be there, but there is not a large impact.
Thank you. We take the next question from the line of Nikhil Purohit from Fident Asset Management. Please go ahead.
Hi, am I audible?
Yeah, Nikhil.
Yeah, thanks. Sir, what was the Hosur facility CapEx that we've done till now?
Can you repeat? I couldn't follow.
The CapEx of the Hosur facility, the defense facility?
Not much. It is around 15 to 20 crores.
Okay. And overall, what is the CapEx that we are planning to do there at the max, and what are the asset turns there?
Hosur we are talking about?
Yes, correct.
About 50 crores more, 50 crores more we expect to do that, maximum.
Okay. And what are the asset turns in this asset, like the peak revenue that we can do?
This all depends, one of the major program we have participated in is BMP-2 upgradation. If that happens, then, whether that will happen or not, I don't know. This is a tender and we may win, we may lose, If that happens, then it may reach to, at a peak, few thousand crores per year, It can reach to couple of thousand crores per year also. But without that, I am not taking that aberration into account. But yes, Hosur facility itself has a capability to give 400 to 500 crores per year.
Thank you. We take the next question from the line of Aman Veej from Astute Investment Management. Please go ahead.
Good evening, sir.
Good evening.
Yeah. My questions are on the defense side. So first on fuse side. So on last call, you were expecting the trials to get over in August, if I believe. So
October. October was the time frame. I can tell you even without going detail. The range was, DGQA agreed for testing. The ammunition which was to be supplied by MIL, Munition India Limited, because they are the only producer of this kind of ammunition, one particular type of ammunition which is a part of testing got delayed by them, and that was supplied only beginning of October. After that supply of that particular ammunition in October, we have applied for test range to DRDO, which is in Balasore. Our fuses have already been, not only that, they have reached Balasore, ammunition has reached Balasore. Now we are just waiting for the quotation from DRDO for the use of their test range. And once we receive quotation, we will make the payment, and they would give us a date at which time this testing will take place. So I think it should be done within November. It has got delayed by 2 months. One, delay in ammunition supply, and as a result of ammunition supply delay, then their holidays and all that. So DRDO is yet to give us quotation, which I am expecting immediately after Diwali. Then the November testing should be complete. But our fuses, ammunition, everything is in Balasore, now in possession of DRDO.
Sir, just adding to your point, so last time also there was this testing and tenders, and for whatever reason, every order got to the public sector companies and not us. This time, are you seeing anything which is different? First question is that. And second is, you expect the result and orders within the next 2-3 months, but that is very fast. So all those winter, summer trials, all those things are done. And
No, I never 3 months. I never said 2 to 3 months for the fuses. This trial which is happening now, this is summer, winter trial, everything. There is no further trial to be done for these fuses. And there is a very good demand for fuses, not only for India, but export market also. So, once the fuse trial is over, yes, I think order booking should be pretty quick, because there is no separate winter-summer trial for this, When this DRDO trial is the final trial which is going to happen, and export market, these are acceptable trials, But after you receive orders, in every batch, testing takes place, whether by India or abroad. But our other products, which are under trial, radars and all that, we expect orders to come for that, definitely, which are already under trial for last 6 months.
Oh, sir. And just finish the third part, there are these 2-3 players that are there.
Aman, I do apologize to interrupt you. Your audio is not clear.
Aman, we can't hear you.
Just a second. Is this better?
Yeah.
Yes, please go ahead.
Yeah. So my question was that, so there were 2-3 players apart from us who were going trial. So how confident are you that we will be among the 2-3 players who will clear it? And sir, the question was also that there are a lot of tenders.
But a fuse of which products you are talking about?
Fuse.
I don't know of any other player who is going for trial at this point of time. I have no idea. So I know about ourselves. We are very confident that our trial should be successful.
Thank you. We take the next question from the line of Saket Kapoor from Kapoor and Company. Please go ahead.
Namaskar, Kapoor Sahab.
Saket, please unmute from your end and proceed with your question.
Namaskar, sir. Thank you for this opportunity. I hope I am audible, sir. I hope I'm audible. No?
बिल्कुल audible हैं सर, आप बिल्कुल audible.
हाँ सर, नमस्कार साहब, धन्यवाद सर इस अवसर के लिए. Sir, firstly, sir, if you could just give some understanding how our turnkey business execution is progressing, and also on the receivable front, where are we? And how is the contribution from O&M currently? I think so we have a closing order book closer to 3,000 plus crore. So what's the contribution for the first half, and going ahead, how is O&M going to play its role?
So O&M major work is going to start from the next year. O&M is very little at this point of time. O&M contract major contribution will start coming from next financial year, and margin will be decent. About 20% or so margin should always be there in O&M. That's what we think. That was one of your question. What was the second question?
So for the turnkey business, what's the receivable and how should this shape up, sir? For this quarter, we did revenue of 530 crore, and for the first half, I think so we are.
Yeah, Mr. Kapoor, let me complete. Receivable is more or less 180 days. You know, on overall basis, the working capital cycle. Inventory, execution, WIP, receivable is about 180 days. Is more or less is the working capital cycle in EPC business. As far as EPC business is concerned, how it is going, we are addressing, we are doing Punjab execution for BharatNet, for example, which is doing very well. I think this is BSNL has acknowledged to me personally that they have no complaints as far as Punjab is concerned, and it is doing very, very well. Then other EPC, like Reliance's EPC project, of course, whatever number we are doing at this point of time, they are doing very well. There is absolutely no problem. The UP Jal Nigam and those projects, yes, there are problems because of the non-payment by the state government authorities, because of they are not receiving fund from central government. So there is a payment problem at that end, as a result of which execution also has slowed down. But 2 days back, Honorable Chief Minister had taken a meeting in Uttar Pradesh, and he has promised fund to be released from state government, even if funds are not received from central government, and that we expect to be picked up once the payments are released by the state government authorities. But otherwise, Punjab, your GOs, whatever we are executing, are doing very well.
Thank you. We take the next question from the line of Abhishek Kumar Likha, who is an individual investor. Please go ahead.
Many thanks for the opportunity. Happy Diwali to you, Vishwanatha, and all the members of HFCL team. Congratulations for the good set of numbers. मेरे को एक चीज समझना था कि इंटरेस्ट कॉस्ट काफी हेवीली बढ़ रहा है. आई अंडरस्टैंड काफी एक्सपेंशन वगैरह भी हो रहा है, बट हाउ डू वी प्लान टू एड्रेस द फंड पोजीशन एंड हैव स्टिल इनफ मनी फॉर लाइक जो आंध्र प्रदेश का भी हमारा जो लैंड बैंक अलॉट हुआ है, तो वी हैव प्लान्स फॉर एक्सपेंशन ऑफ दोज फैसिलिटीज एज वेल. So how the company has the views on that?
Look, interest cost has increased because of expansion, capex, and bit of working capital requirement having been increased. So, with all profitability happening, profits coming in, internal revenue generation, fund requirement will also come down, and the receivable will also go down. because the NFS, particularly NFS, the receivables which are still to the tune of 400 crores, is expected to be totally mitigated by the mid of next financial year. So once that happens, working capital requirement will go down and naturally the interest cost will also go down. That's what we expect. But when you do the Andhra Pradesh, for example, no DPR has been prepared at this point of time, so I don't know how much investment will happen. It is yet to be decided. But if expansion happens, interest cost goes up, but resultantly revenue will also go up and profitability will also go up. So that should not worry us at all.
Okay, fine. And please.
Very low debt equity ratio. 0.35 is the debt equity ratio, so there is nothing to worry about.
The only thing was it was 116 crores of interest element that was going. So majorly profitability is going down because of the interest element. I was looking forward कि हम इसको कैसे और अच्छे से एड्रेस कर सकते हैं.
हाँ, हम इसको एड्रेस कर रहे हैं ना. एक तो इंटरनल जनरेशन जो हो रहा है और दूसरा आप रिसीवेबल जो काफी, जैसे मैं आपको यूपी का बताया, एनएफएस का बताया, ये रिसीवेबल अभी आने चालू हो जाएंगे. वंस द रिसीवेबल कम्स, इंटरेस्ट कॉस्ट विल ऑटोमेटिकली गो डाउन.
Thank you. We take the next question from the line of Satya, who is an individual investor. Please go ahead.
Hello. Namaste, Nataji. Nataji, the question is on the side of 5G products. Optic fiber cable side पे इतना traction दिख रहा है, globally भी demand हो रहा है, but 5G products में क्या visibility है, क्या traction आप देख रहे हैं globally, India में, exports में?
देखिए, जहाँ तक 5G products का सवाल है ना, एक केबल को भी आपको पार्ट ऑफ 5G समझना चाहिए. क्यों? 5G के साथ डाटा रिक्वायरमेंट बढ़ी है, डाटा कंजम्पशन बढ़ा, फाइबर ऑप्टिक केबल का कंजम्पशन बढ़ा है. So 5G cable cannot be separated out from 5G as such. But in any case, 5G के जो स्पेसिफिक प्रोडक्ट्स हैं, जैसे आप लीजिए फिक्स वायरलेस एक्सेस, हम तो केवल एक ही प्रोडक्ट बनाते हैं 5G का, which is fixed wireless access, which worldwide the demand is there. India is emerged as a country which is the highest usage of fixed wireless access. काफी यूज हुआ है. So demand is there, but one rider I would say the prices have to come down a little bit more, because at the current price and current ARPU, operator needs more EBITDA, and with the kind of a spectrum requirement is there in 5G fixed wireless access, it doesn't give a very good economic proposition to operator. So they are also looking at prices to come down. So I am sure prices will come down by a few $20-30, and at that point of time this demand will increase further. And operators are already started looking at 6G also now. 6G की तरफ देखना चालू कर दिया है लोगों ने कि 6G जब आने वाला है तो उसमें कितना इन्वेस्टमेंट होगा, कब होगा. तो 5G का इन्वेस्टमेंट होगा, अभी एक्सपेंशन बहुत होना है, ये नहीं कि नहीं होना है. There is going to be expansion on 5G, and expansion is more going to be on incremental basis. Incremental in a sense that large part of country has already been covered by operators like Jio. So it is going on an incremental basis. Incremental demand अच्छी रहेगी अगले 2-3 साल. But yes, operators are looking at reduction in the price also.
Right. Sir, what about UBR? UBR में we were developing this point to multi-point. उसका development का status क्या है और अभी उसमें क्या visibility है?
देखिए, छोटा UBR का point to multi-point हमने develop किया already 7 subscribers per base station, but that is not enough. We believe that it has to be more than 7. It should be at least 20 to 30 subscribers per base station. We are already working on that on concept, and the development we believe we should be able to start in a month's time frame, so that we can link more than 20-30 subscribers per base station. We are already conceptual stage पे हैं. डेवलपमेंट समझिए महीने भर के बाद चालू करेंगे.
Thank you. We take the next question from the line of Lakshmi Narayan from K Seema Wealth Private Limited. Please go ahead.
Hi sir, thank you for the opportunity. Could you just throw some light on IBR and optical and the tactical fibers, sir? These have more cables it is specifically made, and also could you talk about margins also, sir?
No, IBR I have talked quite a lot, The IBR is 800 64 fiber, 1728, 3400. Those are all there, and which are being used by telcos and data center operators both for long haul connectivity, and telcos are also using for carrying more data. Tactical cable is a different cable. This is used by defense forces. This is, have multiple layers of metal protection over it, metal protection, and with flexibility. And they are put in the rolls of 100 meter, 200 meter each, and then a soldier can keep on walking, and the cable is laid down from a roll which he carries on his back. And this can be rolled back and then put into somebody else, some other place. So it is, kind of a battlefield communication cable, which can be used at different places multiple times. And it is very strong. Even a tank goes above that, it will not break. So that kind of a cable. So that is required by defense forces. And we already won a contract, 100 crores or so. So we should be supplied during this financial, most of this should be supplied this financial year itself. We are also increasing our capacity. We have 3 machines at the point for tactical cable. We are increasing to 5, and we also want to backwardly integrate in terms of manufacturing those steel tubes also, which are required as a protection layer. So we want to go backward, buy the sheet and make that tube internally rather than buying the tube, which would give us a better, competitiveness.
Thank you. We take the next question from the line of Kaushik Jawar from AK Investor. Please go ahead.
Yeah, thanks for the opportunity. Sir, I want to understand, I understand we are doing a lot of stuff in defense, optical fiber, you see a long runway of growth. So where do you see, it's a longer term question, I don't have any short term question. Where do you see HFCL, the things which are planning on, I mean, there is a lot of learning curve. For last 5 years, we have been a lot of work in Navy, defense, and EPC companies, BSNL products, these things. But where do you see in next 3 to 4 years or 5 years, because as a HFCL, I mean, can you throw some light on this? That's all.
I couldn't understand, Kaushik, your question. Your voice is not very clear. What is the question?
No, I'm asking, sir, as a long term, where do you see HFCL in 3 to 4 years? In the past, last 4 to 5 years, we have been into this defense, OFCs. We have, have good experience on Navy and technology, EPC services. But where do you see from this juncture to next 3 to 5 years as a HFCL?
Okay. I will tell you. One, fiber optic cable is going to remain a very strong area, as we have already discussed. Defense is going to be another strong area because we are coming up with a lot of new products in defense and new alliances also, which when happens you will come to know. Then, of course, EPC is going to be another area where we would be working on. Because large number of EPC projects like BharatNet are already there and which are working. So these are the 3 areas, major areas, if you look at, you can say, and telecom products, of course. When I say OFC, I take it as a part of products. So OFC, telecom products, defense, EPC. These are the 4 areas the company is going to be concentrating.
Okay. And one more thing, I have a question on defense. When you say, there are a lot of tie-ups which are happening in the defense space, there's a lot of attraction, right? But you are saying that since we have done the R&D, and you are saying next year 500 and the next year is 1,000 crores. It looks like a very ambitious number. For HFCL, we'll be able to do.
Mr. Kaushik, I said next year 500 crores, not 1,000 crores. I said 500. Year next to that looks like we should be able to reach 1,000 crores. That's not very ambitious. 500 crores is what? Nothing. Even if I win 1 or 2 tenders, it can reach to 500 crores easily. If I win something like BMP2, it can be multiple of 1,000 crores, So 500 crores, 1,000 crores is not big, One should be able to get it with some good effort, with some good effort. And when we are designing locally, please remember that, local design is more competitive, more acceptable, and today's environment when country is talking of Atmanirbhar, it is much more acceptable to army. But yes, local, when you design something, you are designing for the first time. It's unlike some foreign company which is using that kind of product since last 5 years. You are doing it the first time. When you do for the first time, you put up for trial, it is bound to have some problems, You cannot expect some very next generation product design and first instant itself it will work flawlessly. It doesn't happen that way anywhere in the world. So it takes some time, but once it is proven, then the demand is there. Like, our coastal surveillance radar is being used by Navy for 6 months. From one they use 6 months, now they put 2 more in trial in different working conditions. And if they are successful there, then they are going to buy more for their different usage.
Thank you. Ladies and gentlemen, due to time constraint, we take that as the last question and we conclude the question and answer session. I now hand the conference over to Mr. Mahindra Nata for his closing comments.
Gentlemen, thank you very much for attending this Q2 earning call of HFCL today. And I can only tell you that with this increase in data consumption in the world, hyperscalers increase in multifold happening in the world, demand of fiber optic cable mushrooming, not only in India, but much more so worldwide, Number 2, defense being another area of major growth, because countries constantly, our Honorable Prime Minister has given a multiple times this statement, the country needs to be self-reliant. And our strategy of developing products locally, though it takes time, but finally it gives very, very good result, as we have done in fiber optic cable, designed locally and it's giving us good results. So similarly, defense products, though designed locally, takes time to prove it successfully because they are high technology. But when it gives results, it gives in multiples, which we have done with cables, which we are expecting to do with defense also. Same part of time, telecom products, demand is picking up. 5G, 6G, this capex will always keep on happening in telecom products. EPC contracts, major contracts are coming anyway. BharatNet and all that. Once 6G comes in 3 to 4 years time frame, those demand is going to increase. So overall, I can see a very, very good future. And I still maintain that revenue growth of about 20%, which we said it could happen. It is definitely going to happen. Profit margins, what you have seen in this current quarter, 19% or so EBITDA, I am sure we will be able to maintain that in the next 2 quarters of the current year also. And revenue growth is quite expected with the increase in cable capacity, fiber capacity, and better demand, not only demand, better supply of telecom products. I see, the commitments given by us to the shareholders in terms of revenue and profitability. Company should be able to do very, very well in the next 2 quarters. Thank you very much. And for any follow-up question, investors can reach to Mr. Amit Agarwal, our Head of Investor Relations. He would be glad to answer any further question you have. Thank you, gentlemen.
Thank you. On behalf of ICICI Securities Limited, that concludes this conference call. Thank you for joining us, and you may now disconnect your lines.
If you found this video helpful, please like, share and subscribe to Concall India for latest upcoming Concall.